users love it. The product, okay, the bike, the instructors, the yoga classes, the treadmill. Here's the problem. $300 million lawsuit around music rights. How does Peloton figure that out while at the same time trying to figure out how to make a profit on a service that people like?
Well, the service is, it's got a good return on investment. You've seen what the churn numbers are. You've seen how much growth there's been over the past 2 years. They've gone from a $220 million company to a $915 million company, and they've only gotten 5% of their addressable market as they go into Germany. They're only in the US, they're only in the UK, they're only in Canada. So the upside of this company, it's probably similar to Netflix in 2002, 2003.
Sure, because once you buy the bike for $2,000, you're gonna keep paying that $39 a month subscription fee. I think it's still $39. I was one of the early users. It's about the last time I used it, just as a result of the schedule. But the music thing is a big deal, Michael. How do you advise the company to solve this? Because the music industry is, hey, you're growing, we want our cut.
Yeah. Well, listen, I don't comment on impending litigation and probably some smart moves when Peloton's in an S1 and they can't fight back for what they said, but that'll take care of itself. There's still a lot of great content out there.
Okay, why are you so optimistic around the IPO when we've seen the market not react well to some other companies? I'm looking at Uber, and I'm looking at Lyft, and I'm looking at Smile Direct.
Yeah. Well, it's like there's this wonderful term called unicorns that we all put these companies into. I think there's 800 of them at this point right now, right? But when you file the S1, you see the numbers don't lie. And at the end of the day, it's like they have low churn, they have an amazing fan base in terms of their NPS scores, and it's just that.
What is an NPS score?
Sorry, NPS, it's like a net promoter score. So that's basically the likelihood of like you or me to be an advocate to recommend.
Say, hey, I got a Peloton, you should check it out.
Yeah, and so their NPS score is between 80 to 93, 100 is the highest. You can be a negative 100. So Bank of America's NPS score, for instance, is a negative 24. People aren't recommending Bank of America. So when you have advocates, and given that 80% of their buyers of the past 2 years weren't even in the market for a home fitness product, that's pretty good.
845 companies IPOing globally around the world this year, many of them down this year, many of them down, obviously they just haven't been reacted well. What does it take to make a successful IPO these days? Because obviously Wall Street's kind of trying to figure it out.
Yeah, and listen, we're at the mercy of like a presidential tweet could throw off the market or throw off an IPO at any given time, right? So it's just the fundamentals are there. It's a strong business, just getting started. One of the facts is, and people say, what's an expensive bike? One, you can get it for $58 a month when you put in financing. And two, their digital revenue, their app-only revenue this year is going to almost equate to what Beyond Meat's total revenue is. So we don't talk about that. This isn't a bike company. This is a digital fitness company that's making money in ways that I don't think most people have gone deep into.
So you're getting money off users that don't even have the bike.
Yeah, they'll do.
They're signing up because what people don't realize if you don't use the product is you've got an app. You can put it on your tablet, whatever, and you could, what we do is we stream it to the television.
Right, yeah.
So now you've got the big screen TV with the yoga class or whatever it is. So you can be a Peloton customer and not have to pay $2,000 for the bike or $4 or $5,000 for the treadmill.
Correct, yeah. And it's like between yoga, between meditation, between boot camps, the average user, the average Peloton user was using it 7.5 times 2 years ago. Now it's 11.5 times. And with a base that's grown hugely, and still low churn. So it's like this is a great business ready for a long ride.